Two women, two different businesses, but the same problem.
Interest rates, the interest rates. Yeah, it's really tough at the moment for a lot of families. Can't put food on the table, everything's gone up.
I think as soon as the first interest rate rise came, there was an instant loss of confidence.
And anxiety is building ahead of the next interest rate decision.
It feels like, a couple of days before that Tuesday, it's really quiet. And then it feels like about a week to 10 days afterwards, everyone's sort of in shock.
To fight inflation, the Reserve Bank has lifted interest rates 12 times in just over a year. And the cost of servicing a home loan has more than doubled.
We're trying to fight inflation by punishing households who have debt, basically.
There are other ways to lower inflation. We could impose super profits taxes on particular industries, lift the amount employers pay in superannuation, increase productivity and competition, raise the Medicare levy and change our tax system.
We need to look at those tax concessions that go to people that are hoarding wealth and not spending it into the community. We need to look at taxing property much more than we do.
To push prices down, per capita boss Emma Dawson says politicians need to be brave.
The biggest tool that governments have to fight inflation is to raise taxes. But the challenge, of course, with any kind of fiscal policy and any kind of tax change is you've got to negotiate it through the Parliament, you've got to target it quite tightly to ensure that you're affecting the people you want to affect and not punishing others.
Lifting the Medicare levy, for example, would take money out of the economy, but it would hit middle-income workers already struggling. There are other ways to reduce prices, like making it easier for people to switch providers like banks, utilities and insurers. But nothing works as fast for lowering inflation as raising interest rates.
It's a blunt, savage instrument. It's aimed to suppress demand. It's the best tool that we have available for a short-term response.
The Reserve Bank says government price caps on gas and coal and help with energy bills will lower inflation by 3/4 of a percentage point this year. Could we do the same to supermarkets, banks or telecommunications companies?
We could go down a route of direct price intervention, price and wage intervention, but it's very difficult to do. We don't really have the institutional setup to do it. There are millions of prices.
Forcing banks to pass interest rate rises to depositors faster could encourage more people to save. Another option is to improve productivity.
To improve the efficiency of your processes and procedures so that you can bring down your unit cost of production.
Inflation is still running at 7% a year.
There's a certain section of society doing very well, spending quite a lot of money, probably adding to inflation, but rate rises are not going to affect them or bring their spending down. And that's simply because the Reserve Bank does not have any other tools in its box.
On the shop floor, no easy answers.
At the end of the week, you work out what you've made. Can you afford to buy a little bit of extra, a little bit of luxuries, go out for dinner, or do you pump it on the mortgage, or do you put it aside for a rainy day? So everybody's in the same boat.
With markets tipping 2 more interest rate rises, we'll see if any other tools get taken out of the shed.